The man who broke the Bank of England has freedom that few people experience. Here's what he did with it and how he got it. After surviving Nazi occupation in Hungary during World War II, George Soros went on to create his own hedge fund in 1970. In 1992, he profited $1 billion on one bet against the currency. His theory of reflexivity is the foundation of his success and is built on understanding how humans interact with the market in a cyclical nature. With all of this success, he created a network of foundations that have an impact of $1 billion per year. He himself has given $32 billion to philanthropic causes. All of this came from his prowess in the financial markets. If you take big bets and understand human nature, you can start making an impact like George Soros. So just to elaborate on the lessons we're learning from George, it's really three things. We need to take real big bets, we need to understand human nature, and then community investing. I love that the man did community investing, and I'll harp on this till the day I die probably, but money is not meant to stay with one person. It's meant to flow between people for the exchange of goods and services. And so as you are collecting money, it is simply you're catching it for a second before you let it go to pay for other goods and other services. And a lot of people pay for goods and services that don't make them money, liabilities. Other people pay for goods and services that do make them money, assets. And so we'll get into that a little bit later, but let's start with big bets. So George made a huge bet against one currency, and this is where he got the nickname of the man who broke the Bank of England. He profited $1 billion. This was after 22 years of owning his own hedge fund. He made a bet against the currency. I didn't look up which currency it was, but he made a huge bet. He was just shorting that currency, and he profited $1 billion because of it. And a lot of people are like, that's insane. How do you make $1 billion off of one trade? You probably don't even know what a trade is, or that you could trade currencies. A lot of people, I'm sure some of you out there do, but the real question is, what was he risking? Because when you're taking a big bet like that, he at least had $1 million downside, a $10 million, a $100 million downside. Maybe it was 1 to 10. He was risking $100 million and he could make $1 billion, right? Or maybe he was risking $10 million and he could make $1 billion. Those are really good odds. But how many of you are willing to risk $10 million? How many of you are willing to risk $1,000, $10,000, $100,000? Granted, George was probably doing really well for himself at that point, and if he had lost that bet, I don't know where his financial situation would have been, but the point still stands. He made a huge bet where, yeah, he made $1 billion, but he probably also risked north of $100 million. I would bet. I don't know the exact amount of what he risked, and maybe he felt like he was risking virtually nothing because he had such a good knowledge with his law of reflexivity and his understanding of human nature. So he knew what was going to happen maybe, but nobody knows what's going to happen. There was a risk. He did risk some capital, and I'm willing to bet it was north of $100 million. And that's just the big bets we should take. Like a lot of us, with the gurus and with online information being how it is and all these services and courses that you can pay for, it's hard to trust. It's hard to take a bet. Take a bet on yourself, take a bet on somebody else. But when you're willing to put your money where your mouth is, you're willing to make a big bet, and you're willing to do that over and over and over again, that's really how you get to a point where you can get those outsized returns. I think it was Alex Hormozy quoting Jeff Bezos that said, in the game of business, it's like you can swing a bat, and it's like, yeah, there's a 1 in 100 shot that you're going to make that swing, that you're going to hit that ball. But if you keep going after that 1 in 100 shot, there are outsized returns. Maybe you risk 1 unit of risk every time you swing that bat. But when you hit it, you're going to get 10,000 units of risk back. And that's why the game of business is worth it. When you're taking big bets and you're hedging your downside, you can continue to survive long enough to keep taking those big bets to really hit it big. That's the game of business. We see George Soros do it. We see Alex Hormozy do it. We see Jeff Bezos do it. And it's like, Keep trying, keep iterating, keep taking those big bets and take them as big as you can. Like right now, $1,000 bet might wipe you out. But if that's the case, take three $300 bets, or take one $1,000 bet, take the time to recover, take another $1,000 bet. Keep taking $1,000 bets until you end up getting $10,000 back. And then when you get $10,000 back, start taking $10,000 bets, because now you can consistently get to $10,000. You can start getting $50,000 consistently. $50,000 bets, $150,000 bets, $2 million bets. And you're just betting on people, betting on yourself, betting on systems, betting on your knowledge. So yeah, take big bets, and it's only risky, and there's only fear if there's ignorance. It's not risky if you know what you're doing. So that's the kind of tidbit on big bets. Next, we're going on to human nature. I was talking with my brother about this. He's a day trader, and I was like, do you ever think day trading will be obsolete? Like, do you ever believe that the markets could just go away and then the skill you've been building for the past 5 years wouldn't be there? He was like, what you got to realize is this skill is based on human patterns. You can spot human patterns in the market, and when you take advantage of those as you're trading, you can create outsized returns. And so when it comes to human patterns, as long as humans are around, their patterns will be around. And it shook me because day traders just started doing this stuff in the last 20, 30 years, right? Wrong. There was this dude day trading based on rice, like way back in the day. And he became like a multi-millionaire back in China because of rice. Because he was charting these human patterns with candlesticks. You should read that book. It's honestly a phenomenal book. The man's biography is cool, and I'm forgetting what it's called. But look up like rice day trader, and I'm sure it'll come up. Or like OG day trader, original day trader. But with human nature, there are cyclical patterns. And that's why Warren Buffett says when others are greedy, be fearful. And when others are fearful, be greedy. Because he's recognized patterns in the market. And when you pounce on those patterns and pounce on those opportunities, you're able to create outsized returns for yourself. So studying that, there are human patterns in microcosms, like human patterns in business, human patterns in the stock market, human patterns in just social interactions in your social group right now. Like there are opportunities that pop up all the time, and you have to understand how humans act when they're scared, when they're happy, when they're overzealous, when they're prideful, when they're loving. Understand those human patterns and know how to spot it, and then know what to do when you spot it. For example, when others are fearful, be greedy. What does the market look like when others are scared? Well, they start pulling their money out. And as they start pulling their money out, that means demand has gone down, which means supply has gone up, which, correct me if I'm wrong, but price will go down. It's not as expensive because not as many people want it. Well, when price goes down and it's a good stock, it's a good time to be greedy as an investor, because now you can buy that stock at an ideal price. But when others are greedy, they're buying a bunch of stocks. They're like, I want to get in on these returns, which drives the price up. So it is the most expensive you will ever buy a stock. You can just understand those basic patterns in the stock market and learn how to spot patterns elsewhere. Which brings me to the last point. George made a big bet. He made $1 billion off of betting against one currency. He built his whole law of reflexivity off of human nature and the cyclical nature of humans. And when he figured all this out and created his wealth, he turned to community investing. He built a network of foundations that have an impact of $1 billion a year. So he didn't create his own foundation and go off to do that impact alone, which he probably could have with how much money he made. No, he got partners in it. And he was like, let's unify. And I think the beautiful part of this concept, I forget what I was touching on about it earlier, but just the fact that that's how we're made. That's how humans are made. Humans are made to be in community. And so like if you had all the money in the world and you weren't with anybody, the money would mean nothing. Because money in and of itself can't do something. Money is an incentive to get people to act. And as you can unify people's actions, that's when you can make big things happen. And so that's why leadership is so important. Understanding how to lead people, get them to commit to your vision and align your visions, align those incentives, and really serve people into who they're meant to be, what they're meant to do, and how they can come alongside you and help you by really coming alongside them and helping them. Like, that's when that community investing concept gets powerful, because when everybody's trying to serve each other and love each other towards a common goal, you can start to create some crazy, crazy results. And I just think it's a beautiful thing that he paired up foundations and went into the world to make impact together in several countries, because it's what we can do on a micro level just scaled up. So we could start right now with the 4 friends around us and our $500 a month. And eventually that will balloon into great amounts of impact. But you have to start now, and you have to start with the people around you and just start using the concept everywhere you can. That's what we got for you guys today on the show. Thank you so much for watching. We will see you on the next one. And remember, we are a community of people judged not by our wealth, but by our impact.